You are listening to the Wealth Formula Podcast with Buck Joffrey. Get ready to change your life.
Welcome, everybody. This is Buck Joffrey with the Wealth Formula Podcast, coming to you from Montecito, California. And if you made it out to our event last weekend, I want to thank you because it was great to see you in person. And I know it takes a lot to prioritize and travel to these meetings. And we had people from all over as usual. And it really is very, very meaningful to meet up as a group with a bunch of people of like mind. And if you were there, I'm guessing you were not disappointed. You know, we had a few familiar faces in the morning talking about taxes and asset protection. And, you know, there was also some great presentations that were new material around asset allocation from a guy who's managed billions of dollars in a sovereign wealth fund. We also talked about the economy. We've also talked about Bitcoin mining and strategies to actually get in there and make a lot more money potentially. But what I think really blew people's minds, honestly, were the talks on longevity by Dr. John Foley and Dr. Rob Hamilton. These guys are part of our community, and it's absolutely stunning to see how smart some of you are. Like John and Rob just blew everybody away. I did a talk too, but it was kind of dumb, a dumbed down version of what they did because they're smarter than I am. But, you know, I think people got a lot out of this, and it's something we're going to continue to do more often for sure, given the response we've gotten thus far from this meeting. And I encourage you to make it next time we do something like that. These meetings are also great in that I get to see what others are doing, right? I'm in a bubble sometimes in Montecito behind my computer screen talking to you, and there's nothing better than actually going out and have you be able to interact with me, because usually I'm just the one in your ear when you're driving or running or whatever you're doing. And what's really fun for me to, learn is that there are these people in our community who are just doing amazing things. I'm not, beyond the medical stuff that John and Rob did, but also, in investing. And it's even more fun, frankly, to me, because it gives me a little meaning to my life, is that I've made a difference for someone. And that is very fun to hear. And I love to hear it. So thank you for those of you who came up to me and mentioned something about that. One of the people who was supposed to show was Dr. Irene Lambiris. And Irene was supposed to come to the meeting. I was kind of excited to meet her because I interviewed her for this podcast, but she ended up having to do what sometimes doctors have to do, and then put on her doctor hat and miss something that she was excited about. So that's too bad, but she has a great story. And if you are up for hearing about how a young female physician is kicking ass in the investor space, and just really a great example of somebody who's taken their personal finances into their own hands, you are going to want to listen to this interview with Dr. Irene Lambiris when we come back from these messages. Welcome back to the show, everyone. Today, my guest on Wealth Formula Podcast is Dr. Irene Lambiris. She is an internal medicine specialist in Henderson, Nevada, although now she is only part-time, and she is a full-time real estate investor. She's been all over, and you've probably heard her on other podcasts, but very interesting story. And she's got lots of years of investing experience and all sorts of interesting strategies. So I want to make sure we got you on the show. Irene, thanks for joining us.
Oh, Buck, thank you. It's a pleasure being here.
Great. So tell us about your journey, right? Like, I have my story where I had no idea, anything about business or real estate and stuff until I read a Purple book,
Yeah, we all read that Purple book. We love that Purple book.
Yeah.
My story is I was born in New York. My parents came from Greece, so they were immigrants, and they had their own businesses, and they purchased real estate back in the 80s when interest rates were like 18%. I don't know, something crazy like that. So zero down, high interest, and they just bought a lot of different buildings.
Sure.
I was the oldest of three, so I was, in charge of helping my parents with the renters and all of that
Oh, wow.
since I was like growing up. And then I just decided to become a doctor and not do real estate. And as I was going through med school, helping my parents, realizing they retired around age 50 from work and because of real estate. And I felt like, wow, I saw a lot of people who maybe were not as, were more educated than my parents, maybe born in the US, that were still struggling and working, especially patients where, they're alone, they don't have any money, they're living in retirement homes. It just started to feel like, this is, pivotal now. Like real estate, I think, is the key to wealth. And so I started buying right after I finished med school during residency. I started buying a lot of single family homes. So I had about a dozen homes over a decade that I bought, fixed, flipped, lived in, rented, sold, Airbnb, all of that. And then in 2020, I was furloughed from a couple of my hospital jobs, and I felt, time to really get serious about investing full time. And then I switched hats and went into full-time real estate investing. So.
Right. Well, that's interesting. So in terms of real estate, you mentioned you had a single family portfolio that was pretty significant. How did that go? And is that still part of, what you're doing today in real estate?
Yeah, I mean, so I basically had vanilla homes. I had homes that I would live in, 3-bedroom, 3 bathrooms near hospitals or schools, or like anywhere I would live. That was my strategy. I was at that time single woman. I wanted a safe place, and so I would live in the property, and then I would purchase another property within a couple of years and rent the original property. And so I would not pay the capital gains, with the tax loss. Sure. So after a while, I felt like it was just not scalable for me. I didn't want to manage all of that. I was doing a lot through Zelle, and I was really lucky. I had great tenants most of the time. I didn't really have any issues, but it wasn't scalable. So during COVID, I sold the entire portfolio. And I purchased a triple net properties like Dollar Generals, Family Dollars, gas stations, things that would be like 20-year leases, 15-year leases. And during 2020, 2021, I had really great interest rates at that time. So I don't know if anyone was purchasing at that time. So cash flow was great. Return on investment was great. And I still felt that syndications were also great because there's just so little that you need to do with these types of investments. And they're scalable, right? You can invest as much as you want, you can buy as much as you want. And then eventually your assets are buying assets, like the cash flow from those assets are, creating more assets for you. Yeah.
And I think your journey is actually pretty common from what I've heard with people who have, make a little bit more money, physicians and stuff who, we all have our moment in this space where we're like, oh, wow, just buy a bunch of stuff and then cash flow starts happening. And, and the next thing it replaces my, my day job and I'm off to the races. But then you realize somewhere along the lines that, yes, but there's easier and harder ways to do that. And I think single family homes are challenging because, as you mentioned, like, you got lucky with tenants. I mean, we have investors in our group who have like murders in
oh gosh
homes and things like that. That's right. Tim, that one was for you, by the way. And so being able to, either do that versus multifamily, and then multifamily is tricky because, you got to buy something, buy something that you are interested in potentially managing and all that stuff. And it gets tricky. And you raise a good point. For a lot of people in medicine or busy people, I think they ultimately end up falling on the real estate syndication side of things because of that. But what got you interested in particular in triple net?
I just ran.
Why don't you first tell everybody what triple net is, just in case people don't know what that is?
Triple net investing is when you purchase a property and the tenant is responsible for the property taxes, the improvements, the utilities, the maintenance, and you're basically just purchasing the property. And most of my tenants are Fortune 500 companies like Dollar General, Family Dollar, so the triple net investing is a lot easier than purchasing single family homes as an investor. First of all, the bank is looking at the tenant and the tenant's finances, more importantly than yours. And so, if you're a busy doctor and you're doing things and you have the cash to buy it, you don't really necessarily have to prove your financial prowess, just, when you're doing it for single family. I mean, I feel like they want everything from you at that point, For a triple net, it's mostly the tenant's finances that they're looking at. So I did the numbers, and it was like over a 10% return. Some of my investments are 11%, 10%. And I felt when I was looking for multifamilies, because that's truly my first love, my parents had multifamilies, all of that. I weighed, the fact of having multifamily, putting money into it, getting a property manager, scaling it, possibly renovating it, selling it in 5 years. And it just felt, time versus ease. For me at the time, the triple nets made more sense, and then as you free up your time, and you don't really need to be doing your day job per se, then maybe you want to do a multifamily, and then you could fly to the property and hire and kind of, do that if you're interested in like owning something like that. Syndication is similar. You still, a lot of syndicators are paying like 9% returns monthly. You don't have to worry about anything. You're still getting the tax deductions, just a little less control over the sale of the property. And so for the triple net property, I felt, this was easy, and I could sell it in 7 years, 10 years, 4 years, 2 years. One of my properties went up so much in value, I sold it after like 1 year, and then I flipped it into another. I flipped it into a syndication. Yeah. So, for me, it's not only purchasing property, but when is the right time to sell and capitalize on that equity? And can you put that equity into something that makes more money? So you just get there faster.
Let me ask you this for triple net property. So I've never done triple net before, but I obviously do a ton of apartment buildings, and pretty reliably we can get, I would say, at least 30% of the asset price depreciation with bonus depreciation after cost segregation analysis. So basically 30% personal property, 70% real property. And the advantage of that is a lot of times, your down payment is 30%, maybe a little bit more. You might, in our case, it's like we also have a lot of capital expenditures because we're value add. But what kind of experience have you had on that front with triple net? I'm curious, especially because I know you're tax focused as well.
Yes. I have a great broker and a great person that does my cost seg analysis through my broker. And so it just depends on the property. So yes, I'm probably more like 75% of my down payment is deductible. Yeah, the first year. So now Biden's changing that law. So I think there's going to be a de-escalation of that like over the next few years. But yeah, so
well, you get 100% bonus depreciation still this year, and then it goes down by 20% per year.
Yeah,
that's the phase out. So, well, cool. And then let's shift to a little bit about the business stuff, because that is, that's a very interesting space. And I'm curious, first of all, you mentioned, I think, getting 10, 11% cash on cash on that, and that's really good. Do you credit that a lot with the rates the way they are? Can you still do that right now?
Really hard to do that now. That's why. So, when I was looking in 2020, it was just, it was really easy to purchase because of the interest rates and the sales price and the cap rates at the time. So cap rates have, as you know, they've gone down since then. And so it's a little harder to make that. So my last purchase, which was, I just closed in July, was a gas station. So that they have 3% bump increases like every year. And there's a 20-year lease on the property. It's again, triple net. And it was wonderful for tax deduction purposes. So I was fine with that. But I'm a contrarian by nature. Like I don't really go with the crowd. So if everyone's buying stocks, I'm probably not going to buy them. If everyone's buying real estate, I'm probably going to look at other things to do. And so now with real estate being that it is, I'm just kind of, have some cash on hand, taking a step back and looking at more like businesses, like small businesses for sale, that cash flow, and looking at that. I think we talked about that in our other conversation, that's kind of what my focus is going to be on in 2023, along with my syndication, syndication investments. So continue real estate, but do a little more.
And maybe you're just, and part of the other thing I think we had talked about before was that I think you mentioned that you thought that this time that we're in right now has actually kind of been at least from a price perspective, a good time to buy businesses. Is that true?
I think so. Yes. I mean, just my opinion, but when I started to buy real estate, it was a great time, right? Houses were sitting on the market, prices were really low. There was not this fervor of buying real estate. You can get great deals. Rents were great. I mean, what I'm seeing now with the small business space, the same thing, like small businesses that are cash flowing, possibly have been worked, with the same owner for 15, 20, 10 years. Now they just kind of want to retire, and they're sitting on the market for so many months. And I feel like it's a good time now to start looking at purchasing businesses. And so I look at I call it boring businesses. So anything that.
Oh yeah, we're all about boring here, Irene. If you listen to the show, I'm a big advocate of boring.
Yes, we love boring, recession proof, cash flowing. And, again, I'm still a doctor part-time. So I still have, something that, I'm good at that. I love seeing patients. So I don't want something that's going to take all of my energy. And, so I'm looking at something that is recession proof and that I can add value, just like we would add value to a multifamily, whether improve the business exterior or improve it on marketing side on the internet or get it on Instagram or, just kind of mobilize it and then add some value. And then in a few years, you can sell that business and make a high return. So
are you seeing some good tax advantages there too? I mean, obviously with the service station, you get there's a lot of depreciation there, but in general with other kinds of businesses.
I think it's still real estate's number one in terms of tax, saving on taxes. As you know, I mean, you could speak to any CPA, not just my opinion, but so yes, you can write off a lot of business expenses to grow the business. But you have phantom expenses with real estate that you have these losses, but they're not really losses. So, still, I think the best tax advantage is with real estate. So I will still continue to purchase real estate. I'm a little bit, deals are a little bit slower now to buy, and I will aggressively invest in syndications and continue to invest in syndications for my, just for that ease of that as well. So I like the self-storage. I think, I like car washes. I like multifamilies, all of that is good too.
Yeah, I think, one of the things that I've always been a little reluctant for on businesses is I actually, I feel a lot more comfortable starting a business from scratch, which is like completely the opposite of what you would think. But I've done it, multiple times now. And so like the thing that when you have a small business, and I'm, talking about probably something with revenue 5 million or less or something like that, is that a lot of times there's like the key people, the key cogs and variables that make it all work, right? And who those people are or what those variables are when you start a business. It makes me nervous buying a smaller business because I don't know what those variables are. I don't know who those people are. So, I've been interested in looking at businesses myself, but, potentially on larger scales so that I could avoid that. But I'm curious what your experience on that part has been.
That's for me, it's more of really doing your due diligence, having the right team. So I have a business attorney that reviews all documents with me. I have a business broker, my CPA. So I have that team that's going to help me avoid any pitfalls. And just like with, real estate, you're looking at something like, is it in a good location? Is it, am I going to be able to add value? Am I getting it at a good purchase price? So you can do the same thing with small businesses. And And I've never really started a business from scratch like you. So for me, it's really comfortable for me to like come into a small business, get to know the owner, get to know the employees, and then go from there and then add value from there. So my strategy this year was potentially buying like 1 or 2 or even 3 small businesses and running them and seeing how they do. And again, I only buy for cash flow, just like most of my real estate. Like if it's not going to cash flow and it's not going to pan out, then I wouldn't purchase it. So it has to cash flow from day one.
Yeah.
So I feel like that reduces the risk a little bit there.
Sure.
And you do have a great point. Like with big businesses, like my bankers and the contacts I have in the banking industry are lending for businesses upwards of 5 million. So some people feel like this is too small, for the big banks to lend on, but you can do seller financing, you get creative. There's a lot of other ways. Smaller banks like credit unions can also help with lending, personal loans, things like that. So, yeah.
Cool. Like I know you've been sort of an advocate for taking finances into your own life, into your own hands and all that. Tell us about some of if you wanted to, I know you've talked about generally sort of this, the details, you've been talking about triple net and businesses. Have you developed a overarching sort of strategy or sort of a personal philosophy to investing that is driving everything that you do?
That's a great question. I think we all as a doctor, I'm super competitive, want the best, like workaholic, all of those things, So I think what's driving me is I really want to be more successful than my parents was like the initial motivating factor. Like they were immigrants, they didn't speak English, They had businesses, they had real estate, they retired at age 50 and they're super happy, right? So, ideally just like, America's dream right there. So I actually, like that, to be as successful as they were and then just go from there was my initial motivating. And I really do that. I accomplish that through budgeting. I really look at my finances, know where everything is going. I feel like if you're organized, to do that is it just keeps everything on track. If you're not organized, find someone who is. And so that helps me track everything. And then just having a certain idea in my mind, like what I want, what I want my net worth to be, what I want to be making passively, and how, once I reach that position, like, what do I want to do with that? Because as you say, it's not just about finance or money. It's about quality of life, spending time with your family, giving to charity, like other things that open up your time. And then with a lot of doctors now in COVID, there's just such a burnout, there's such a burnout from work. I see some other of my colleagues and I really feel like education is necessary, financial education for a lot of these high income earners that are really just focusing on their profession and not really focusing on their quality of life so much.
For me, like the challenge in the physician community, Irene, has been that they are very difficult to people to change minds. And I gave up on that long ago, right? Like, you look at sort of some of these communities that are out there right now that are, that are a pretty traditional type of investing, and they have their own mantras about save, 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 and live like a resident and all this stuff. And it's hard to penetrate that. Have you made an effort in that? What kind of reception do you get? Because I sometimes end up just getting hate mail from,
oh gosh,
from people saying, I'm a devotee of the blank investor, who I'm talking about. And you suck and you're whatever. And I'm like, okay, whatever, dude. So tell me about your experience there.
So I'm going to be very political in my answer here,
I know, because
I do listen to the blank investor too. I'm an advocate of financial education in general, but I love your podcast. This, big fan. I think for me, it's just the numbers, right? It doesn't really matter. I am not a save and invest in the market and wait for my 3-4% per year, because to me, that's like lack of control. And my experience with real estate has been a good one. And I think most doctors are just, the easiest thing for them to do is to invest in the stock market, right? Like for most, it's just the easiest thing. Here's my money. Yes, I want a few $1,000,000 when I retire, and that's fine. But I think if they really started to realize like the amount of, like positives of real estate, and it's just a fear thing, right? You have to overcome the fear of investing. So that's why starting small is important. Obviously, your listeners are already, accredited investors and know, what they're doing here. So it's a little different. But when I speak to doctors, it's like gentle nudge, and I don't really try and push it on them. And a lot of times I get like, oh yeah, sure, I'd love to do that. And then I never hear from them again. Or I give them my, the contact to my broker or to my syndicator, and they just never end up investing. So I think it's more of like overcoming that fear and just doing it.
Mm-hmm.
And, I'm not afraid of real estate because I've done it. And, but I really don't have a 401k, and I really don't invest in the stock market, in all honesty.
Yeah.
But I do like some gold, some Bitcoin, all that other stuff, but nothing,
Sure.
I'm not depending on that for my financial retirement. Although, I may potentially invest in the market at some point.
Yeah. I mean, listen, the market goes down by, all of a sudden goes down by 30% or 40%. Hey,
yeah.
well, might as well write it back up.
I bought during COVID for sure. Like everything was on sale. I was like, okay, let's do this.
Yeah, absolutely. So no, I'm with you there. I was just more focusing sort of, there's a mentality that it's just been difficult, and I just decided I'm just not interested in and I think it's kind of a mutual thing at this point with the them and us. So what are you doing? I mean, you were on a lot of podcasts, right? I mean, you've got
I would say a few podcasts,
ton of views and that kind of thing. What is it that what is your goal in doing these things, and and what do you see down the line as sort of maybe the next step?
I think, for me, it was just continuing to educate other people. I mean, I've been, my life has changed because of the books that I've read and the people that I've met, and, the podcasts I listened to. And I mean, the value that they provide for me was just beyond measure. So I wanted to just kind of return that. And maybe there's someone out there that, resonates with me, and, I can motivate them to do something different with their lives. I just feel like, I did my due diligence. I've paid my taxes. I've done all of that, and if I don't have to do that legally, why would I? And so just spreading the word, continue to spread the education is important to me. So I really don't get anything out of it other than personal gratification. And just feeling like, hey, if I change someone's life, great, and it's also great to network and connect and find like-minded people that you feel comfortable with, because I can talk about this at a dinner, but if no one is interested, then, the conversation gets switched. So,
absolutely. I totally, that's why we have like a group called Wealth Formula Network, and it's an online community, and it meets every other week, and we have a Facebook group and all that kind of thing. But it's like the same concept is like, if you're into this stuff, you're not going to be very popular at parties usually. So it's a good place to like sort of, duck away and secretly talk about these things that you're nerding out about.
Exactly.
Cool. This has been fantastic, Irene. And so where can we learn more about you and what you're doing? Have you written any books?
So I have some upcoming things coming. So I'm going to be on another podcast called Invest Her with Bigger Pockets, and it's just solely for women investors. And they range from really young women investors who are just starting to like more seasoned investors. So I'll be on that podcast in October, and I can give you the dates. I think it's like October 26th. And anyone can find me on healthandwealthmd@gmail.com. Same on Instagram. I am creating a course for high income earners about investing strategies and my strategy with triple nets and syndications and how I use it to benefit me tax wise. I carry a real estate professional status. And so some people need to know what that means and what it is to be an accredited investor. I also diversify with hard money loans and just having, introducing them to my contacts that I've already vetted.
Sure.
So people could feel a little more comfortable. So, so that course is coming out probably by November 1.
Sounds good. Irene, thanks so much for being on Wealth Formula Podcast.
Thank you so much. It was a pleasure.
Be right back. Welcome back to the show, everyone. Hope you enjoyed it. It's great to hear stories like Irene's. And, if you have other stories of your own and you feel compelled to write me and have me read it or something like that, then that would be great too. Or maybe we can go back to interviewing some of you as well. Anyway, this event, of course, was great. Live events are great. But if you want to continue keeping in touch with each other, I would highly consider you also joining Wealth Formula Network. And that's a course, actually. And then the course kind of feeds into a online Facebook group, but also a group that talks live on Zoom video every other week. And it's really, I think, a great opportunity to keep connected with like-minded people. That's it for me this week, though. This is Buck Joffrey and Wealth Formula Podcast signing off.
Thank you for listening to the Wealth Formula Podcast. Visit us on the web at wealthformula.com. The information contained in this podcast are opinions, not fact. As always, consult your own financial team before making any investment. See you next time.